Welcome to another stage analysis video. It's Sunday the 20th of August 2023. As always, got a fair bit to get through on the weekend video. I'm going to start this weekend's video by going through the major indexes and looking at what their stages are, how they're reacting during this current correction. And before getting on to the futures charts, the industry group relative strength rankings, bell curve, market breadth for the weight of evidence, and some of the week's stage 2 attempts, before finishing off with the weekend watch list in a bit more detail, discuss the stocks in that and why they've been selected. Okay, so starting off back to the major indexes here, as always, looking at the S&P 500 from a weekly perspective first. Use at the bottom of the chart here, we've got our combined percentage of stocks above their 50-day, 150-day and 200-day moving averages combined data, which gives a really good proxy of what's going on in the market in terms of position, gives you a rough idea of the overall stage as well. But at the moment we've dropped down to a 40% level, so we're at the lower end of the neutral range. So between the 40 and the 60% range is the neutral, more when you tend to be more in a stage 1 or a stage 3 type environment. So this isn't covering the entire market, mind. This isn't the S&P 500 itself, which obviously is in a clear stage 2 in its first significant correction, but this covers the entire NYSE and the Nasdaq, so it gives a broader perspective. So on a broader perspective, we're in a more neutral position. We're at the lower end of the range in either a stage 1 or stage 3 more neutral type environment. So if this does continue to drop low, then obviously would get more negative there, get below that 40% level. So if we go back to the actual chart, you can see we've been in stage 2 now since technically it broke out a little bit earlier back here on the 27th of March week. So we're now 21 weeks into the stage 2 advance, so 5 months or so roughly at the moment. So still in a fairly normal range for a stage 2 advance. Tend to obviously go from anywhere from 3 to 12 months. So at the moment we're very much in the mid range, and we generally don't consider it to be late in stage 2 until at least after 2 quarters, sometimes as much as 3 or more, so 9 months or more a lot of the time. But there is something that I did note recently. There's some of the automated tools have been suggesting that this might be stage 3A already, but that's probably technically too early for that. As if there's one way you can do that, if you're looking at a chart like this or the Nasdaq, for example, you can flip the chart if you're a little bit more unsure on the pullback what it's doing. So you can flip the chart in the stock charts, for example, by using a minus in front of the symbol, then simply just do that, and then you can see it just flips the data upside down. The bars are shown the opposite way, so actually they didn't close at the bottom, then they close at the top. But basically, if you were looking at this on a weekly, this is not yet what we would consider into stage 1. So this would only be considered stage 4B minus at the moment. So on the flip side of that, stages work in opposites. So if we're only in stage 4B minus on a flip chart, then we can't be in stage 3A on the normal chart. We can only be in stage 2B and a potential minus on that. So all the minus means is that it's in a technically sort of weak position at the moment in that stage. So basically, if I go back to the main chart here, all of it, if we're in stage 2B minus or just in stage 2 minus, either one, depending on where we are during this, we're not yet technically in stage 3. It hasn't been significant enough of a correction. As you can see from this at the moment, the S&P 500, we've only had just under a 6% pullback, which if you go back through the history of S&P 500 pullbacks during stage 2, they tend to be in the 5 to 10% range. So if you go through all the 2020s, all the 2016, all the 2019s, 2013, 2012 kind of times when we were previous stage 2 advances, you can obviously look at the various pullbacks during stage 2, and many of those will come all the way back to the 30-week moving average. Not always. Sometimes you only get a week or two below the 10-week moving average before rallying back out again. So you can see we've had 1 week below in the S&P 500 the 10-week moving average, which is starting to flatten out here. So there is a chance that this could turn into a change of behavior and could become stage 3, but at the moment it's not technically there yet. So it would still be considered just a weaker pattern in stage 2, i.e. a normal correction. So if that does go beyond the normal correction correction, then obviously we would change that assessment. But at the moment, it would still be just considered, as I said, I would give it a stage 2 minus at the moment here, not a stage 2B minus, as it's potentially a bit too early for it to be considered that one. If we look at it on the daily, you can see the same kind of thing. So again, if I flip this quickly, just to give you a daily perspective on that. So you can see on a daily chart, you would not consider this stage 1. You would obviously be looking at this and just see it's had 4 days closing back above the 50-day moving average, and it's just potentially moving into, that would be stage 4B minus at the moment. It would need a more significant change of behavior, and then obviously up towards the declining 150-day 30-week moving average area, and then start to roll back over there again in order to be considered stage 1. So this would only be, as I said, stage 4B minus there. So obviously on the actual chart, this wouldn't be considered stage 3A because of that. So hence just a weaker pattern in stage 2 at the moment that's dropped back below its 50-day moving average. So we're looking for it to obviously attempt a rebound at this point. It's got a little bit extended in the short term. We can see the percentage of stocks above the 20-day moving average in the S&P 500 has dropped down to 18.8%. So we're in a short-term downtrend, which we can define by the minus 1 ATR level is a good proxy of that. So we've entered a short-term downtrend over the last 4 days here, and you can see we've dropped into the lower zone of the chart, so below the 30% level. Once we start to make a move back through this 30% level, obviously then quickly get back through the midpoint, back through the 50% into towards the upper zone, then that's our signal on the upside again. But at the moment, obviously, we're in a short-term downtrend, and when you're in a short-term downtrend, it can obviously hover in the lower part. So until we get that reversal, it's obviously a little bit more cautious. We're still in a corrective mode. And I talked about on the midweek video, not this week, or was it last weekend's video, but I talked about recently that how you can go down to the lower time frames and use stage analysis on the lower time frame. As if you imagine this obviously on a much lower time frame here, you can see it would have a stage 2, a stage 3, and a stage 4. So we dropped to the 195 minute chart, for example. On this, you can see obviously the breakdown from the top of the range up here started to break through. So we would be currently sitting in a stage 4 decline on the 2 bars a day. So that's half of the daily chart there. So if you continue drop down the 2 hour, the 1 hour, and you can see they're in stage 4 on the 2 hour, the 1 hour is on stage 4, the 30 minute is potentially a minor change of behavior, but still wouldn't even be considered stage. You might get a 4B minus at best on this at the moment. You'd need a change of behavior back above that 30-bar moving average and start to consolidate a bit for this to be considered stage 1. So even down to the 30-minute time frame on this, it's showing stage 4 decline on the intraday chart. So until we get a change of behavior on at least the more minor levels on the intraday charts, then obviously we're not looking to get aggressive on the long side here. We're on a defensive mode. So we go back to the Nasdaq 100, you can see exactly the same kind of move, a little bit stronger than the S&P 500. The futures in this have actually dropped off 9%, so this has only come off just over 8% in the index itself. So 2 weeks below, it's still rising 10-week moving average at the moment. So again, we would consider this stage 2B minus at the moment, and potentially just stage 2 minus, as we haven't had any significant bases since it's actually had this first pullback. So this is only the first major base since the stage 2 breakout back in March. So at the moment, a little bit too early to be considering this stage 3. You can see at the moment, and the percentage of stocks is still fairly high above their 200-day moving average at 66% in the Nasdaq 100. If we look at the daily, you can see it's within a normal range for a pullback. We're still above the 61.8% on the Fibonacci level, whether you use the 38.2, whichever direction you do it from when you do your Fibonacci levels. That's considered that area between there and the 50% level, considered a normal pullback when you're rising up in stage 2. But from the Nasdaq's perspective, it's a little bit more volatile than the S&P 500. So while the S&P 500 tends to have between 5 to 10% pullbacks, we see more like in the 7 to 15% range in the Nasdaq 100. So at the moment, we're in as I said, we've done a 8 to 9% pullback in this. So it's still in a normal range in a pullback, although it's pulled below its 50-day moving average now for the last week or so here. So it is, again, if we flip it, you can see Same kind of thing. This wouldn't yet be considered stage one on the daily chart. If you were looking at this in any other stock or any other item, you would only be in a stage 4B minus position at the moment. So we'd need a more significant change of behavior, pulled it up and then started to pull back down. So at the moment, still would be considered, obviously, stage 2 minus at the moment on this. So let's go back to the daily, and the same with the percentage of stocks below their 20-day moving average here. We'll quickly refresh this. You can see that has dropped all the way down to 14% at the moment. So this one is still in the lower zone, and we're looking for a rise back through that key 30% level in this as well in order to get more aggressive again. But until then, it is getting a little bit more oversold in the near term, but it is in a short-term downtrend below that -1 ATR level. So we need to see it at least get back into neutral territory, back towards the 21-day, and obviously ideally that +1 ATR level, which we would then consider it in a short-term uptrend. As you can see, if you look through, I'll draw the line through here quickly. When it's above that level, you tend to be in what we consider a short-term uptrend. So rough drawing there, but you can see the majority of the price action holds above that level when it's trending to the upside, and it's below it when it's trending to the downside on a short-term basis. Again, using your intraday charts, you can do exactly the same thing. 195-minute chart, you can see this is in stage 4 on a 195-minute chart, and obviously below that. So all the way down to the 30-minute here, again, no change of behavior as yet. So same with the Nasdaq as the S&P 500, and the Nasdaq Composite doing the same. We've only got 34.94% of stocks above their 200-day moving average in the Nasdaq Composite, so still relatively weak. And even though the Nasdaq Composite itself has actually moved out into stage 2 since May here, it's its first significant correction. The percentage of stocks in the entire Nasdaq hasn't managed to get really out above its midpoint yet. We haven't really got over that 50% level, and obviously ideally we want to get above 60% and greater. And you'll note during a typical stage 2 advance, we'll take this back in time a little bit. So select start end date. You'll be able to see, if I go back a little bit here, that actually when you're in stage 2, it strengthens up quite considerably. So you can see it actually gets above that midpoint. It's not the same as the Nasdaq 100 with being above the 70% level for so strong, but it generally gets into the upper half. So this is the 2020 period where it got above, and you can see as it rallied off into stage 2 in the late part of 2019, it was above that 50% level as well. So it doesn't get quite as strong as the Nasdaq 100 or the S&P 500, for example. Right, let's move on. Daily chart, as I said, doing the same as the Nasdaq 100, really. If we look at the NYSE Composite, this, on the other hand, has got a potential stage 2 failed breakout attempt again. So we had a failed breakout attempt back at the start of year in late January, early February time there. So we've got now potentially a secondary failed move. Both, again, failed to get above that 70% level. With the NYSE, it does tend to get above the 70% level and hold there. It's when it starts to break that back down below there that you start to get signs of stage 3 developing, which we can see through this area. As you can see, it started to weaken off significantly through that area. So at the moment, with the pullback, we've got the investor stop loss with when you have your stage 2 breakout goes below the 30-week moving average and obviously the point of the low. So it hasn't technically stopped out the initial stage 2 attempt on the investor basis yet. Obviously on a trader basis it would have. So it's still technically stage 2, even though it's rolled over here, but it would be, obviously, there's good potential that this is a failed breakout attempt unless this can recover this very quickly. If it does start to recover this level again, then that would move it back out into stage 2. So at the moment, this is hovering around the midpoint at 51.37%, whereas the Russell 2000, again, doing very similar thing. It's pulled back below its stage 2 breakout level here, hasn't knocked out the investor stop loss level yet, but has got close. It's stopped at that 30-week moving average at the moment. So unless this can recover back through this level very quickly, then obviously this could also turn into a failed stage 2 attempt. So, and the daily chart of this shows that it's just testing its 200-day moving average with only 21.5% of stocks above their 20-day moving average at the moment, so into the lower zone. So again, we look for a reversal move back out above the 30 level, but until that happens, obviously don't get too proactive there, as it still could hover in this lower area for a while, as we see in previous moves when obviously it gets below those levels and chops around. So back through this area through here, it can hold in the lower zone for a while.